Hello and welcome to the Wendell Effect. My name is Brandon Wendell and I'm going to guide you through my view on various markets. So welcome. We'll go ahead and kick this right off. Let me shrink me down and move to the next slide here and just remind you that we are not registered broker-dealers or investment advisors. Taking a look at this information from an educational standpoint only, not telling you to buy, sell, or hold anything in particular. And this is not tailored towards any particular individual. Any performance is not indicative, or it's not indicative of future success. And don't invest or trade in anything that you can't afford to lose, because there is risk definitely involved in these markets. And we're not subject to trading restrictions if we got a position in security and initiate one at any time. So if you want to stay in touch, please do. You can email me at the Wendell Effect at tradingmindsetassociation.com, and also hit me up on Twitter at TraderBW, and you can search for the Wendell Effect on YouTube, as you've probably found it already. So welcome back, everybody. And today we're going to go ahead and do our usual. We're going to take a look at the weekly market analysis, start off with the equity index futures, moving on into energy futures, sector analysis and rotation, and take a look at individual stock opportunities, and take a look at the Indian markets to see what's going on over there. Finally, wrapping up with a little bit of crypto, although with the crypto winter, there isn't a whole lot going on there, unfortunately, more or less intraday opportunities. So kicking us off on the equity index futures, we'll start with the big one, the S&P 500, and you can see that on the weekly chart we did a pretty deep retracement, basically 61.8% of our previous impulse down, so exceeded where I thought it was going to stall out, which was 4,200, and now we're seeing topping tail, and we're getting closer, but we haven't gotten there yet, to September. September is historically the worst month of the year for the equity market, so we'll see if that continues to show. We did not get into bullish territory on this rally, so that tells me that there's still potentially more room to go to the downside, even though it was a pretty deep retracement. So on the daily chart, you see we're turning around and moving back down. There's no signal, though, that we're going to crash here. So all I'm really seeing is possibly a push down to 4150, and there's a demand zone that we likely will take a bounce from this week. So I expect maybe Sunday, Monday, maybe even Tuesday to be a bit bearish, and then bouncing off that demand to finish off the week with a little bit of a retracement back up. I doubt we'll get back above this 4,300. As a matter of fact, the first couple days of the week might actually form a supply zone right here. You have drop, base, and we need to have follow through, so we'll see if that happens, but that could be a good shorting opportunity just under 4,300 if we get that bounce and we start to change the trend. I mean, the trend is still bullish, though. I don't have a bullish trend line, but it looks as though we're kind of testing the trend line here, maybe just broke it, so we'll see if that's the case, if we start to get some weakness coming in. But other than that, I mean, the only thing I've got for sure is that we're likely to move down and bounce off the 4152 first. On the 4-hour chart, we're actually closer to a demand zone here. You see that we had some warning signs of weakness where we rallied and could not get above 60 on the RSI. So that shows a lot of weakness, and that means this demand zone is actually likely to break. We might get a small bounce, but that would be all it is. Likely to go down to that 4135, which is a little bit inside, I believe, of that daily demand at 4150 that I was looking at. Looking at the leadership here, the Nasdaq and the Russell were the leaders to the upside. So when they give up, that's where the Dow and the S&P start to fall. You see the Dow has been the weakest since the rally. This was June 16th for the start of that study. That was really the beginning of the recent rally that we've had here. So looking at that leader, the Nasdaq on the weekly basis, our impulse down retraced 61.8%, just like we saw in the S&P. Although this was a little weaker than the S&P because it couldn't get above that 61.8 retracement. We couldn't close above it. Anyway, you also see that we could not get above 60 on the RSI. That's very bearish, and continuing to say, hey, you know what, we're not done with the bear market. We're likely to continue to push down before the end of the year, maybe even make fresh lows. So on the daily chart, same picture. We have a divergence, and we're pulling back towards the demand. Now, this demand at 12,981, that demand has already been tested once, so we're likely to go a little deeper into the zone. Be interesting to see if we get a small bounce off that again to make a right shoulder. This could be a head and shoulders formation starting. If I go out, let's see, I don't know if I have my browser open. I don't. So let's go to a live browser here and take a look. Oops, wrong page. There we go. Oops, NQU 2022. Oh, sorry, I need to log into my live account to populate with real data, not delayed. As soon as that loads up, come on now. Anyway, So here we are on the Nasdaq again. I'll go to the daily. And on the daily time frame, what I was suggesting is that there may be a possible head and shoulders formation. So what we would need for that is for price to test the demand, obviously, do a small bounce. And as you can see, same thing on the S&P. We're kind of forming a little bit of a possible drop-based drop supply zone there. That could be the top of the right shoulder and a really good shorting point for us for that bearish trend to begin. You know, the warning sign was the negative divergence first that told us we were going to pull back, and we'll just see how far back we pull back to. If we can rally here and not go above 60 on the RSI, then that would really be kind of the death knell for price to drop down to that low 12,000 area. So keep an eye out for that possible head and shoulders forming. So, whoops, that was right there. Okay. Anyway, continuing on here on the 4-hour chart, we moved away from a supply that we saw again on the other time frames and are moving down towards 13,073 as a possible bouncing point for that right shoulder. Then right here, it looks like it's not really great, but there's a bit of selling pressure about that 13,500. That would be the upside target, maybe the move pushing us back down. I forget what it was on the daily. Yeah, it was a little higher. Or no, sorry, lower. It's 13,398. So inside of that, again, if I go to the 4-hour chart, try to fine-tune this and really get short, perhaps right in here. Now, it's not the best looking zone because that's not really a leg in, but you see the origin of that selling pressure is really around that 13,481 is what I got it at exactly. So that's where I'm thinking it might bounce to after we again got to first come down and test the 12,981, 13,000 area. So look for that to form this week and possibly give you a couple of trade opportunities, both long and short. Weekly on the Dow, we got really kind of a indecision candle. This is a gravestone doji is what it's called, because you have a doji opening the same and closing the same price, and then the bigger wick on top than the bottom, so that's why it's called gravestone. Anyway, it's a bearish signal. So we confirm it if we break the lows of 33,485 this week. So if we break the lows, notice we're not above 60, that should send us much, much lower in price, maybe even breaking 30,000 before the year end. If we can break the high of this, it negates the pattern at 34,246, then we're likely to keep rallying. So my money's on the short side, honestly. Here we are with the daily trend to the upside, trying to form our third test of that trend line. Now it's official, but it looks like it's getting ready to break. Now, it won't make new lows right away, so if we break down, we're likely to stall out right in this area of, what is that, 33,300? And then maybe a bounce before we go lower. But I do believe that the bearishness is starting to leave in the markets. And on the 4-hour chart, pretty much the same thing. We got some pausing points at 33,360, 32,805. As we continue to get weaker and weaker, you can see we've got more bearish momentum now than we've had for quite some time there. And that's the push that we need to get below the trend line and stay bearish. Looking at the Russell, same sort of picture. We had two zones here, rally-based drop and then drop-based drop. Anyway, we hit that lower zone, didn't get above 60. That's pretty bearish. This is really kind of a bearish harami that we would confirm if we break the lows. So on to the daily chart. This wasn't really a great supply zone, but you can see that little basing type candle before selling pressure. It held. It worked at 20 and a quarter. And we're moving down. Now, we're not going to make fresh lows. We'll probably stall before we hit 1900 and bounce a little bit before we go lower. But same as we saw in the other markets, this little area, drop-based drop, could be forming a new zone that we could use for supply. So keep an eye out for that as well. Excuse me. Anyway, on the lower time frame here, I thought there was going to be a little bit of a bounce at this area of demand. It didn't actually hold. It wasn't really confirmed. You know, we had just the breakout of the prior high. So tried to make a move up and unfortunately just broke through. That was from last week. So looking at this week, oh no, sorry, that is this week. That was just a follow from last week. So we're seeing more bearishness and demand zones breaking. We're even pushing down towards that 1918 right now. As a matter of fact, this is a new supply here at about 1993. Kind of rally base and drop right there. So if we do move up at all, bounce off that 1993, I would look for short targeting 1918. And that's on the Russell. So moving on to the energy markets, let's see what's going on in crude oil. Weekly chart, we're still pushing down towards demand at 83.50. We got close, but not there yet. And we're seeing buying pressure picking up as we come down there. Still trying to hold above 40, which would really show that there's more bullishness still underlying and that demand will hold. So we're not there yet, but again, when we come down to the demand, we'll look to see, are we below or above 40? If we're above 40, the demand on the weekly chart should hold. If we're below, it'll break. Simple. On the daily chart, you can see that we had a positive divergence, and that led to this little rally we've got going on right now over the last 3 days. It was, Wednesday, Thursday, Friday, but this also formed a bit of supply, and as we open up on Sunday going into Monday, that 92 area is going to act as a bit of resistance in supply and push us down towards that weekly demand that we had at 83. Now on the daily, I don't see any great demand there, but the weekly's stronger, so it could hold us up at that 83 area before we get down. And on the daily, there's nothing until about 76 as far as demand goes. On the 4-hour chart, not seeing much here. I mean, there's some weakness because we barely got above 60 as we made this peak. Made another new high, but you can see we had much less momentum, so that's suggesting we're going to open up on Sunday and Monday and move downwards very sharply. So again, I expect prices to move down to towards that weekly demand for the week. Looking at the seasonal move for crude oil, it really doesn't do much this week. It's pretty sideways. You take your pick. Half the time it's been down, half the time it's been up in the last 10 years. So not really getting any kind of seasonal effect there, at least not yet. Next week, however, there is a bit of a rally that we could possibly see. So I would think that we might be moving down before we bounce again. On the nat gas, last week we made a new high, but we didn't do it with a lot of momentum, and that's a problem. You need more momentum, not less, to make new highs. So without that new momentum, we're likely to see a pullback coming in this week before we can go any higher. It doesn't mean we're going to go bearish, though. Okay, so we already had a bit of a pullback to 7.784. We could actually come down and test that lower demand, or well, that's actually not a great demand zone. I was looking right here, rally, base, rally. Could hold us up about 8.6, 8.7. I don't know. We'll take a look at the 4-hour chart and see what it says. Nothing really there. We're just breaking sideways. And depending on, I guess we've already retraced about 61.8% of the previous move. Let me take a look. Now I'm using the October contract because we're going to be rolling over soon anyway, so might as well just get a head start on that. But again, if I look at this move to the upside and the retracement that we were having on this, let's do this. Yep, that was pretty good on the eyeball there. 61.8% retracement is exactly what we had. Looks like we're ready to impulse back up again. So wouldn't be surprised to see us break out some new highs, go over 10. Yeah, wow. So if we go back to the seasonal move, well, again, it's 50-50 on the last 10 years, so there's not really a bias in either direction during this time of year. Next week, however, again, you can see that it becomes much more bullish and even more bullish going into the beginning of September. So, yeah, we're seeing that already, just going sideways, kind of biding our time. We could be in for more sideways price action before we break out, but there's definitely a bullish bias in natural gas. Moving on to gasoline on the weekly, got really nothing here. We can't get below 40, so we're probably just going to go sideways another week. It's been several weeks of sideways price action. We tried to move down, went back up, went nowhere. Again, not a lot of fun unless you're day trading or scalping. On the daily time frame, we hit a demand, bounced up, made a higher low that did not go below 40, so there's some underlying bullish pressure trying to push us higher. I just don't see it having a whole lot of momentum yet, so we're likely to get stuck sideways, unfortunately. On the 4-hour chart, pretty much seeing the same thing. We had moves below 40, above 60. We're just going back and forth. This looks like messy, a mess, basically. So I don't really want to deal with it. I'd rather find something that has a higher probability and better trading opportunities. So continuing to move on here, 60% probability, 60% of the time for the last 10 years, it's gone to the upside. And it hasn't really given you much return, 0.2%. So again, it's not the best time to be trading gasoline either. So wait, next week we got bigger spikes historically on the seasonal charts. So just be patient. Heating oil also working its way down towards the demand. This will be interesting to see what happens here. We're moving up, but can't seem to get above 60 yet. So this week, if we break out of the highs and get above 60, then the bullishness should push us up just underneath that 4 area that we see right here, that rally-based drop supply. If not, then we're going to get stuck sideways or drift a little lower if we stay below 60 and can't break out of the high. So watch for that on the weekly. The daily is actually suggesting that we might push down. We're trying to get above 60, but we're holding, and we're holding supply. So there's not enough bullish momentum to really take us higher right now. And I wouldn't be surprised to see a little pullback at least to this. You know, you got drop base rally right there at a 3.5 or 3.45. So watch for that for a bouncing opportunity on this pullback. And on the 4-hour chart, yep, that's pretty much where it is, 3.4795 right there. So that's what I'm looking for, this pullback in price to take us today, starting Sunday, Monday, Tuesday, and then possibly get bullish by the end of the week. But yeah, we got a negative divergence that should give us a pullback just like it's done before. That's all, just a pullback. And that gives you the opportunity to buy the demand zones. So look for that. Now, this is different than the other markets. Seasonally, we actually move up this week 70% of the time over the last 10 years. So we'll see if we get that pullback, and then by the end of the week, as I mentioned, finish higher when we bounce off that. All right, so we're going to take a look at the stock market itself and see what's going on there. Sector analysis for the last 6 months, we're still seeing the flight to safety with the staples, healthcare, and utilities kind of leading the way. Obviously, energy still has a problem with the inflation going on here, even though some of the numbers have softened a little bit. We still have a lot of booming going on there, so we'll see what else is going on. This week, changing to just the last 6 days, again, energy is falling off a little bit, but now we're being led by staples, and that is, again, a flight to safety. So people are anticipating more bearishness in the markets. That's what we're seeing right now based on that buying. Looking at the map of the market, again, you can see consumer defensive is the only sector that's really green, along with a little bit of healthcare here, and not really too much cyclicals, just some specialty and home improvement, which again is what people are doing. They're fixing up their homes if they're going to be spending time in it, not going out and spending money. So the other thing you'll normally see is a little bit of rally in utilities because of the usage of that too. Oil and gas exploration, that's still the inflationary effect hitting some of those. ConocoPhillips, Oxy Petroleum, and so on, Devon Energy, Hess. But other than that, everything else is starting to get a bit weaker. So looking at the sector ETFs, we'll start off with the consumer discretionary, and you can see we're in a retracement right now. We hit a daily supply, 173.24, 177.24 that I went over with you guys, and that was last week. So we moved into that supply and pulled back. We are still retracing. We might be able to pause or bounce at the 38% retracement of 165 or down to 50% of 162. So, we had negative divergence going into supply and just pulled back on it. So I still think this is going to be more of a bearish than bullish sector. I see us pushing back down. Looking at Carnival Cruise Lines, that was actually a bullish trade we were looking at from August 15th to September 13th. I put that one out there as a buy opportunity. Notice it shows it pulls back a little bit before it rallies, but almost 90% of the time it's a winner during this time of year. So that was a trade that I put out on the 15th in the weekly video, and you can see we're not going anywhere. This is what it looked like on the 15th. We were near the top of the breakout range. I was hoping that would give us some sort of breakout or maybe a small pullback to buy the test. And you can see that we are doing our pullback right now. So no entry yet. We may end up bouncing right here after we close the gap. So let me see what that is. If I go out to my live chart here, Carnival Cruise Line, and you can see it on the 4 hour as well, just as easily as you did on the daily. So this might be a possible entry point for that long. And that would be 948 to 927. And therefore, you could put the stop loss below that. And you don't have to do the full 69 cents. Probably could do that. Let's see. Yeah, probably don't even need that much. Maybe around 898, just under 9, maybe 892. Give it a little breathing room. And there's also a demand zone here as well if this one doesn't hold. So it does look like we're going to try to bounce, but keep an eye out. If the RSI is below 40, I typically don't want to go long right away. I want to wait a little bit, simply because if it is below 40, then you got momentum that could break through that demand zone. So keep an eye on that. If it is below 40, the only way I would go long is if I get positive divergence while we're in the zone. Okay, so That's it on Carnival. Looking at the communication sector, it looks like we pushed up and moved right into supply, as you can see on XLC. And well, we'll see if that holds. It looks like it should go through that zone. We got a lot of momentum. So communications are likely to continue to be a little bit more bullish, breaking out of the sideways range. At the very least, we might get a small pullback to retest the prior highs before we go higher. So, I'm sorry, that was the previous one, and look at what it did. It did actually pull back to the prior highs, and it's trying to retest. So, sorry, I didn't realize that was the previous week, and now this is this week's current view. And again, what we did is we went into the zone, pulled back, but we may get a bounce this week. So, look for a possible bouncing. If I go to the XLC chart, there we go. On the 4-hour, again, we got a possible demand right here with the gap closure. 56.92, 56.58. So we'll see if we pull back to that area and get enough bullishness to bounce. Just again, be aware of the momentum. If it's too low below 40, we're not going to break out right away. You need a little bit more momentum to get you going. So XLK technology, I showed you the breakout of prior highs. Let me just make sure. Yep, and look at what happened. It just kept going. Basically, it broke out, retested, and it went up to now the 138.2. It did stall at 1, so it's stalling at all the Fibonacci extensions and pulling back, but we're not done moving up. So we should have had a little more momentum, but we're not that bad off. It looks like this is going to continue to push a little bit higher in technology as well, ultimately moving to 155, it looks like. So we're probably going to pull back and bounce off 147 and then go up to the 155 for this week. Industrials, same thing. We've broken out. We actually bounced off the extension. You notice we stalled out at prior extensions, but we stalled or pulled back, and it looks like we're retesting this 98.22 before we go up to that supply of 104. So it's not done moving up on industrials either, just getting a little pullback perhaps this week. Now, CPRT, that is Copart, that was one of our chart opportunities we were looking at buying on the pullback to 119.79. And this was being put out, I believe, early August, right near the 1st or the 3rd, whenever I did the video. Anyway, you can see it's gone nowhere. It's just choppy and sideways. This is still a valid opportunity. If we can get a pullback to the 119.79, still good demand, still good buying pressure. We may just go sideways and break to the upside, though, so we might miss out. So Copart, as you can see, all the way till mid-September, still bullish. So it looks as though, really, look at this, on the historical chart, it really just kind of goes sideways until the end of August before it rallies. So really, we're probably looking at that sideways motion and a breakout to the upside to hit our target. So it might have to be a little bit more flexible, perhaps. Going into the live chart here, again, looking at this, just going sideways, I don't really have a great entry. Maybe you can use this, but that's not a good demand zone. It doesn't have the follow through you would need, but that may be all we get on this little pullback that we're getting right now. 126.80, 125.56. If we're above 40 on the RSI, we don't have enough bearish momentum to break through, then that might be the chance. I would have probably put the stop loss just below that area, maybe 125.23 or so. 20. Let's see, we're in that area, 22.23. And again, target 133.92 and then 139.67. So, anyway, that's what's going on with Copart right now. Hey, what was the last one? We just looked at that. Okay. It's got duplicate charts here. Cintas was another one that we were looking at for a bullish opportunity. Again, it kind of goes sideways and then rallies late August into September, 90% of the time nearly for the last 15 years. So when we looked at the trade opportunity, we were waiting for a pullback to 401. And going forward here, you can see we never had it, but we are getting ready to pull back now. So be aware that this is pulling back. We have a negative divergence. On Friday, we started selling off. It's likely to pull back a little more. I don't know if it'll get all the way down to 401. You might have to find an intraday opportunity inside here that could give you a better chance to go long, because it may not pull back enough. Okay, so if we go to Cintas and drop down to a 4-hour, let's take a look. Nope, I'm on the 4 hours. Nothing there. I go down to 60-minute time frame, and I don't really have anything great as far as where to buy. So I wish I could help, but I really don't see anything there. I'm not going to force it. So I might just have to wait on this one too, unfortunately. Yeah, I just don't see it pulling back to 401. If it does, great, but it's not likely. Anyway, building materials is also in a little bit of a pullback. You see we made our high this week and pulled back to 50% of the previous move. It looks like we're getting ready to bounce again. So we could bounce from this, from where we are, 79.05 to make new highs, or we might go a little lower to 78.38. If we do start to bounce on Monday, if you were to go long on the ETF here at 79.05, you put your stop at the previous level there, 78.38, and then again target some new highs. Energy sector, XLE, still trying to move up. As you can see, we broke to a new high last week. We're looking like we're going to try to tag that supply zone at 83.14. There's more momentum coming in to help us do that. So energy looks a little bullish, and we had Valero now looking at this from a bullish opportunity from today until the 7th of September. We got 86% movement to the upside for the last 15 years. So very few losers there, only 2 out of the last 15 years. And the average return is 3 1/3%. So that looks pretty good. Yeah, so let's see what we got with Valero. With Valero, we need a little pullback to be able to buy. And the only demand I have really is 106.39, 102.70. So hopefully we can pull back to that area. We might just pull back to this candle. And again, let me get those numbers for you. I believe that was on the 240. Yeah. Actually, wait a minute. Is that a daily? Yeah, Valero was originally on the daily, but I'm looking in that 110 area and we break it down. There is this, it's not really a good demand. I mean, maybe we pull back on the 4-hour time frame into this rally base, rally to a new high. So 114.63, 112.58. You could possibly do that. And you place your stop at about 112. You can say 32. That'd probably be pretty good. And again, the same targets would still apply. Target 1, 128.57. Actually, that's all I got. So that may be a trade opportunity right there in itself, going along at 114.63 to 112.58. So keep an eye out for Valero. Consumer staples should continue to go up. You can see we're stalling out really deep in supply and also at a Fibonacci extension. This looks like it's just a pause before we go higher. So again, consumer staples looking to run. Unfortunately, I don't like to trade breakouts too much. If you were to trade this, go to the daily chart here on the XLP. If you like trading the breakouts, which personally I don't, I like to wait for a retest after the breakout. So what you could do is this, simply box in this sideways motion that we're getting right now, wait for it to close above 77.40 on the daily chart, then retest that area, go long on the retest, and basically I don't have an overhead target, I believe. Yeah, there is a little bit of possible selling pressure that comes in right here. That might be your first target. But either way, you want to place your stop loss just below this area. Oops, come on. There we go. So I got about 76.57, and the target, you always want to exit just before you get to zones. You don't want to exit at the zone itself. So we're going to want to take profits probably right around 77.90 if you go long at the 77.40 on the breakout and then retest. Okay, I don't get aggressive and trade the breakout. I wait for the retest. Typically it works out pretty well for you. So that's what we're seeing on staples. And consumer staples, you could see from August 25th, not the beginning of the week, but towards the end of the week, I think that's Thursday, it does get pretty bullish. And 80% of the time from the 25th till September 8th, it is bullish. And the average return is 1%. So do expect this to become more bullish by the end of the week. It may happen early, we'll see. Like I said, wait for the breakout and the pullback before it goes higher. So that's kind of the way to play the XLP ETF. Inside of that sector, we have Constellation Brands, which basically 86% of the time has a nice rally from the 22nd to the 15th of September. So that'd be Monday. And the average return is 2.86%. It's a pretty good return. So looking at Constellation Brands, we do have a little bit of overhead supply, but it has been tested. So we could get through that 254 area. But basically looking to buy around 243.73 with a stop at 239.52. And then maybe target some new highs. Just put in a trail stop and let it go. Might be an opportunity to let it run. Moving into healthcare, not really much to say about this. It's just grinding upwards, very, very weak, but it's still going up. Overhead target is at 138.42 supply. Anyway, DHR is a trade opportunity inside of the healthcare sector. It looks like it pulls back a little before it rallies, but 80% of the time for the last 15 years, we've had rallies here about 2.5%. So, waiting for an opportunity, we need to pull back to our demand. On the daily, it's 277.44, 269.44, stop at 269, and the target 323. So, possibly good rally coming in this. Hopefully we get far enough down we can get long. We may not. It looks like we had somewhat of a sideways action here. Let's see. It's talking about those breakouts and retests, and actually, yep, that's what it looks like it's doing right now. You see how it went sideways? I already marked it off. Maybe I put that in the slide too. Did I? I did. See, that's what I was thinking. When I saw this, I'm thinking, okay, sideways breakout, a sideways motion breakout retest, right? And there it was. There's the retest of the breakout. So you still might have an opportunity to buy if it opens around that 291.47, because this was an older trade idea that I had sitting here from early August. And it just never pulled back to the original demand, but this may be a buying opportunity, 291.47, targeting that 323 with a stop below 284. 284.07 maybe. Anyway, utilities still moving higher. It looks like we got some overhead. Target possibly 78.40. So we stalled out at the previous levels. But this is not going to stop. It looks like it still wants to go higher. So looking for some bullish opportunities there. I didn't really have anything. And financials, again, also still a little bullish. Pulling back just slightly. But it looks as though we're not done moving up. Just don't really have any great opportunities there. In the individual sector, Aflac was a trade opportunity I had put out back in early August. I think did I follow up on this? Yeah, I was looking at a possible buy opportunity on Aflac, and I'm not sure if it pulled back or not. Let's take a look. Oh, it did. That's right. It actually hit, and as you can see, it went in at 56.08. So this was a trade that I picked out in early August before I went on vacation. So hopefully you were able to get long on that as it came back and hit the entry spot, hit target number 1 with a gap up after earnings, and I think it's hit target number 2 already. So it has. Last week on Thursday, we actually hit target 2. So that one's done. That was a very successful opportunity, hit both target 1 and target 2. So there you go. Anyway, our last sector is real estate. You can see we were bullish. We had a positive divergence confirmed by a low that was not below 40 on the RSI, so therefore we broke to the upside. We're actually at a little bit of supply right now. Might get a bit of a pullback, but this is still pretty bullish, so it's likely to continue higher. And right now, we're getting that pullback that I was speaking of. It looks like we may be done if we only did a 50% pullback. If that's the case and we end up breaking out above 44.87, if you're aggressive, you could take the long on the breakout of 44.87, targeting 46.24 and then 47.30. If you do go long at 44.87, your stop should probably be 44.56. Okay? So that would be more of a breakout trade, which I don't normally do, but if you're aggressive and you want to do that, you could. Looking at FRT, this is a bullish trade opportunity from Monday the 22nd until 17th of September. Normally moves up pretty well. You got to be careful of this little pullback. We don't want to give back profits or it gets stopped out too soon. But 86% of the time, it moves up very well with a 2% return. So looking at FRT, we have an area, small demand. It's not great because this wasn't the most powerful moves up, but it could work for us if we buy 108.08 with 106.72. Stop goes 106.24. And our first target's this supply. We want to get out before that, maybe 123.89. Anyway, that's it for the equity markets in the U.S. I'm going to go over to India now, and for the week of August 21st, take a look at the Indian markets. Kind of mixed bag here, a little more green than everything else, but some major players, Infosys and TCS, were definitely bearish. On the Nifty Weekly, we broke out of our trend to the upside, but it could be a false breakout. Be careful. We did indeed close with the RSI above 60, so that's suggesting this might just be a retest before we go higher this week. But I'm not completely convinced. You can see on the daily, we ended up hitting a Fibonacci extension of 1.618 and are simply correcting down a bit. We might just pull back to this 176.50 1750, 170, no, actually maybe 17,650. I think that's where we're going to bounce, possibly in that area. So watch for a little pullback there before we bounce. Should give you the correct data here. Let's go Nifty on the daily. There it is. And that's actually the retracement value of 17,634. But also there's demand right there, 724,597. So we did hit it already, and we'll just have to see if we bounce from that area come Monday. Anyway, on the daily, let's see. Yeah, not much going on. This is actually a 4-hour chart. Sorry, I should have changed the text there. I didn't. But anyway, this is the 4-hour, just showing a little pullback. Again, same area, seeing a little bit of buying pressure coming in there around that 17,500, I believe it was. Yeah, and that's the retracement value that I put in. Actually, 17,634 may give us the bouncing area there as well, rather than 17,500. Anyway, Reliance might be the catalyst, so watch Reliance as it pulls back. It has a bit of demand right here at 25.95 to 25.80. We're still very, very bullish. We had a bit of divergence. Notice the high, low, same or a little lower high, while we made the higher high in price. So that's suggesting a pullback again, not a reversal of trend. So if we can balance 25.95, there might be a buy opportunity there to target 27.32. So keep an eye on that for the 4-hour. You want to put your stop below 25.80. TCS, I mentioned, is a little bit more bearish this week. You can see it trying to move up, but it did it with less momentum. We started pulling back, and it looks like we might pull back a little more, maybe even retest or close this gap before we go higher. So keep an eye out for that. Not really best trade opportunity, but you could, again, on the 4-hour chart. There's a Tata Consultancy. There we are. Again, looking at pulling back potentially to about 33.59, 33.35. And see if we get a bounce there. So, yeah, on the 4-hour, we're just going sideways. That's all. Infosys also did a retracement this week. You see it's gotten a bit weaker, and we went back 50% of the previous impulse. Looks like we're still not quite out of it yet. We're having some struggles with momentum, so we may continue to move down to 61.8 at 1567.40 and get another bounce there. Or if we can break out above 1603, then we're likely to continue our impulse up. So watch to see. If you break 1589, then we're going to head down to 1567. If we break out of 1603, then we should continue to move higher until we hit 1737.90. That's on the 4-hour. HDFC Bank, okay, keep an eye out for the right one. It looks like it's going to pull back a little more to the 1480 area. We do have a possible overlap between these little doji candles, the retracement of 38.2%, and even our 61.8 extension from previous impulses. So that could be a pretty good area for prices to continue to push to the upside after this retracement. ICICI Bank also doing a retracement. It's only retraced 23.6. Very weak retracement. Could go a little bit lower towards that 38.2 at 857 before we bounce. Anyway, the Bank Nifty also hit a target here. You see we gapped and opened up right at a 1.618 extension, which was a target for this upward move. And we could get a little retracement back before we go higher. So I would not be surprised to see us touch the low 38,000 before we go higher. Anyway, look at the Bank Nifty on the smaller time frame. You see the pulling back that's happening. We made it back to 38,965. I would not be surprised to see us try to close some of this gap, or at least stall out right here at about 38,475 before rallying. So watch for a little more pullback before we go higher. On the 4-hour chart, you can see we do have a retracement level of 509, but we could just close the gap first and bounce. So what is that gap? Let's see. That would be about 38,308. So I don't see us going below 38,000, but 38,308 is a pretty good target for us to bounce. So keep an eye out. You can possibly even put in a long there. If you see that we're not below 40, we have some bullish momentum, and place your stop 1 ATR below. So if we look at the average true range, That average true range is 350 points basically. So if you went long at 38,308, be putting your stop loss just under 38,000 at 37,958. That'd be a pretty good opportunity potentially to go long. So that's what I got on the Indian markets. Moving over to crypto, not a lot going on there. Still pretty much crypto winter, if you will. You can see a lot of red in the last week. There was a few standouts. Leo, that was about it. For the most part, things were pretty bearish and they're continuing to look that way. We got a kind of a dead cat bounce on the weekly of Bitcoin. Last week, we started moving down again. So I would not be surprised eventually if this 16,000, 19,000 zone breaks and we head to 11.5 before we go higher. That's what I'm seeing. There's nothing here to drive us higher. So we just had a bit of an impulse down. That large candle after move down like that, those are novices basically selling off late. You can see there's a little bit of demand here that's been tested already, so we're going to get a bounce, but this is just a small bounce before we go lower. So unless you can short, maybe you do the futures, right? If you wanted to, you can go out to Bitcoin futures. You got BTC, or we could do, what is the micro now? I can't think of it. Micro Bitcoin. MBT, that's what it was, just in case you want to have as much risk. And we were looking at the daily here again. Really, it's this last candle that's likely to be retraced. So what happens is, if you were to look at a Fibonacci retracement of that last candle, and bring it down to the 4-hour chart, there's a supply zone, but I don't know if we're going to get that high. But that could be a selling opportunity on the futures for crypto. Because again, you might not be able to do shorting on crypto itself, but you can sell futures on it. So that's 22,650, 22,775. Let me see if there's anything left on the 60-minute perhaps, because I don't think we're in that high. You can see we pulled back. Well, no, we just made this low, so that's not pulled back yet. I don't know. We could go to this 38.2, which is 21,940, and do the same thing where if you sell 21,940, you put your stop 226 above. That's the ATR. So there's a possibility, as I said, of selling at this retracement value, 21,940, with the stop loss. Let me see. Plus the ATR 226, 166. Oops. We'll do 165. There you go. That's the tick value. So if you want to trade the futures, you can possibly short at 21,940, 22,156 would be your stop loss. And let's see, as far as targets go, you can just hold on for a while, honestly. Looks like it's going to get pretty bearish, but there's your first target. Let me turn on the Snap 2 feature. It'll give me better pricing. So you're looking at a target of about 19,850 for your first target. Looks pretty good there for a short opportunity. So we'll see what happens. But yeah, other than that, I mean, I'm not very bullish on crypto right now because there's no reason to be. So it looks like, again, we're getting these retracements going on, getting ready. We did a 23.6 retracement that we could just drop from here, but I think we're going to go a little higher, as I said, before we drop. So we'll see. Ethereum also did a bit of a retracement. You can see it only made it 38.2% of this preceding impulse down, and that's a weak retracement. Here, it looks like we retraced 50% before we moved down. So we got more bearish momentum picking up, and we should be moving down towards 715. And there are futures on this as well if you wanted to trade that, even the micro. Let's do the front month contract right now. And again, looking at a daily chart here, we just had that little bit of retracement and pushing back down. It's kind of late to get in at this point, so I think I would just watch this and not do anything right now. So, but it does look like we're going to go lower. And again, on the daily chart, we came in kind of a weak supply zone and dropped. Yeah, looks like there might be a little bit of a bouncing point right here, but that may be already retesting a prior demand. So I don't know if I want to take that long. So overall, we're still seeing a lot of bearishness in these markets, although we didn't get below 40. That's kind of interesting. If you go to Ethereum on the daily time frame, I could look at it on the daily for the futures too. It doesn't quite look the same, obviously. Alright, let's go to the specific Ethereum. There we go. So again, on the daily, you have this demand zone here, drop-based rally that could offer a little bounce. And that's going to be about 1450. Let me just make sure. There it is. 1455 to 1355. Could get a little bit of a bounce there. Actually, let's clean this up. There we go. A little bit better. But like I said, that's just a possible retest of a prior area. So I'd rather trade the origin of the area rather than this test of it, because that may not have as many orders left over. But if you were willing to take a little bit of risk, you might be able to do that. And I would say we're not going to go behind or stronger than that candle. We're probably going to stall out somewhere in that. And if I bring in retracements, you'll see where we're likely to stall, especially if we go down to 240. Oh, look at that. Right there's a zone also at a 50% retracement value. So that would make an excellent target. So if you happen to buy either 1455 with a stop at about 1350, or if you buy at the untested, or sorry, the original zone 1386, 1319, we're most likely not going to get above this area, and that would be your target right about there, 1674. So it'd be a counter trend play. You got to be a bit careful with counter trends. The overall trend is down. We're just playing a little pullback if you want to go long. So that's pretty much it. That's all I'm seeing on the crypto side. Not a lot on the upside. Even the 4 hour doesn't really show much else. You do see that zone sitting right there. So you could try to buy one of these zones, perhaps. And yeah, hope for the best. You just get these little pullbacks before it goes lower. Anyway, that's what I got for you. So hopefully you enjoyed this. If you did, let me know one way or the other. Let me know if you see things that you like. Let me know so I can keep including that. If you see things that are missing, let me know so I can fix it. And I hope to hear back from you. Again, you can email me or comment down below. Please hit subscribe and like the video as well. It helps me out a lot. And until next time, trade safe, trade well, and everyone take care.